Next illustration 7. Here from the following particulars of Money Limited and Kani Limited, prepare a common size income statement for the year ended 31st March 2019. So here also you have your revenue from operations, other income and the expenses. First column is for Money Limited and the second column is for Kani Limited. So in the previous illustration we saw information related to only one particular year. Now we are seeing the information related to two different firms or the companies. Okay, so now you will have to draw 5 columns. The basic 3 columns are going to be same, that is your particulars, absolute amount, percentage of revenue from operations is going to be same, but two more columns are for the since there are two different organizations, you have to find out 2 percentages, right? So that's why. So now common size income statement for of Money Limited and Kani Limited for the year ended 31st March 2019. Particulars for Money, absolute amount and percentage of revenue from operations. For Kani Limited, absolute amount, percentage of revenue from operations. It is not necessary that you should use only one side of the accounts book notebook. You can use both the sides. Okay, so please keep in mind the basic difference of your comparative and common sizes. Absolute amount of one firm, of absolute amount and percentage of revenue from operations of one organization should be written first. The second, the fourth and fifth column will be for the second organization, Kani Limited, absolute amount and percentage of revenue from operations. Please do not change the format because this is the basic difference in the format for your all the 3 tools. Okay, so here revenue from operations, the amount is given as 2 lakhs and 2,50,000. So after drawing all the 5 columns, you will write money rupees 2 lakhs, Kani Limited rupees 2,50,000. Then you have other incomes as rupees 30,000 and 25,000. So add up other income 30,000 and 25,000. Add up these two values, 2 lakhs plus 30,000, you get 2,30,000, which is your total revenue. And again add up 2,50,000 and 25,000, you get rupees 2,75,000. Okay, after this you have your expenses, which is rupees 1,10,000 and 1,25,000. So minus expenses, that is less expenses, 1,10,000 and 1,25,000. So 2,30,000 minus 1,10,000 is 1,20,000, which is your profit before tax. Okay, this is your profit before tax, 1,20,000. Now 2,75,000 minus 1,25,000, you get rupees 1,50,000. Again, this is also profit. Okay, as I said earlier, if there is loss, we will not calculate the income tax. Don't forget that. Okay, now these columns will be empty for now. So after filling in these informations, you take your revenue from operations as the base value, which is which is 100%. Okay, for the remaining accounts we need to calculate the percentage of revenue from operations. How to go about is 30,000 divided by revenue from operation amount, which is 2 lakhs, into 100. So 30,000 divided by 2 lakhs into 100 will give you 15%. Then 2,30,000 divided by 2 lakhs into 100, 115. Then you get 1,10,000 divided by 2 lakhs into 100, you get 55. 1,20,000 divided by 2 lakhs into 100, 60. So again I'll repeat, always take up the exact amount, divided by the revenue from operations amount, multiply it by 100. Okay, this is how you can calculate the percentage of revenue from operations. For the next organization, again 2,50,000 should be kept as the base value because it is your revenue from operations. Then 25,000 divided by 2,50,000 into 100 will give you 10%. 2,75,000 divided by 2,50,000 into 100, you get 110 percentage. 1,25,000 divided by 2 lakhs into 100, 2,50,000 into 100 will give you 50 percentage, and 1,50,000 divided by 2,50,000 into 100 will give you 60. So this is how you have to do. Again I'll repeat, you have to keep your revenue from operations as the base value. That will be your denominator. Numerator alone will change. Numerator alone, the exact amount of other income, total revenue, expenses and profit before tax should be taken.